Candle range theory is by far one of the best trading model, and it's very simple to trade. But there's a lot of candle range theory strategy, CRT strategy out there. And what I'm about to show you guys is one of the best and most effective candle range theory. And this now I'm about to show you guys, you're not going to see it always on the chart, but once you see it, it's good. This is type of this is the same strategy I've been using to post multiple setups and even pass my profit as you guys see it. So I'm going to be teaching you guys I'm not just going to teach you guys candle range theory, but I'm going to teach you the most effective way to trade it. Now, basically, candle range theory is the concept that a single candle represent a range in the lower time frame, right? So, candle range theory, the setup usually, so there are different patterns, but one of the most popular pattern is this one, which comprises of three candles. This whole thing is based on the logic of accumulation, manipulation, and distribution. So basically, what you're looking to see is you're looking to see a first candle, then you're looking for you to see the next candle to sweep this previous candle's high. Then you are looking to enter on this one candle. When this candle open, you look to enter at the protraction and then expand, take your profit at this way. That's basically the logic of candle range theory. That's how you trade it. And why does this work? There are many reasons why this work. One of the reasons why it works is basically what I told you guys about accumulation, manipulation, and distribution. The second reason, the one that I've noticed is because of based on what you are taught, candlestick pattern. Whenever you see this kind of dodgy candle, what are you expecting? You are expecting the next candle to be bearish. This dodgy candle is a sign of bearishness. So this is the reason why you need to trust the strategy. But now let's go back to the strategy. How do you actually trade it? Now, the first step you want to do, where I'm giving you guys a more refined and the best approach to trade it. The best CRT occurs in a key level and in a key time of day. Take note of that. It occurs in a key level and in a key time of day. So what you are waiting for, what you're waiting to see is yeah. So what you are waiting to see is the first thing you want to do is to wait to see this thing occurring. You want to be doing this in a 1 hour time frame. So you want to see this thing occurring either the 1 a.m., 3 a.m., 6 a.m., 9 a.m. And so these are the candles you want to focus on, right? Especially those candles before opening, right? So this thing will form before 9 a.m. This will not be 9 a.m. we should be trading. So this is basically what I'm saying. So timing is key, but sometimes I don't really look at timing, but it is key. And the second thing you want to look for, you want to see that this thing is occurring in a key level. You want to see that there is some form of key level that this thing tapped into before is showing this reversal. Once you get these two things, you are good. Now, what are you going to do? You are going to jump over. If you see it in a higher, this will be your higher time frame. You want to now jump over to your lower time frame, and you are looking for a fair value gap after this candle close as a doji candle, sweeping this high and close below. It needs to close below. That is key. It needs to close below. Then, when this candle open, you are looking for a fair value gap to enter your trade. Put your stop loss above the fair value gap high, and that is as easy as that. Your take profit will be here. Now, a key rule that I use while trading this strategy is if it is in line with the trend. Let's say this is a trend. Let's say the trend is bullish, it's already bullish. Let's say the trend is already bullish. So maybe this is what we are getting. So we want to get a retracement to continue to the upside. So if the trend is already bullish, no. If it's in line with the trend, this is a bearish setup. So let's say the trend is bearish. If it's in line with the bearish trend, maybe price wants to do something like this and continue to the downside, then it is safe to take your profit at the other side of the range, right? Look at the low of the range. But if it's not in line with the trend, let's say the trend is bullish and you are seeing this setup, this bearish setup in a bullish trend, then I would safely say that you should take your profit at 50%. Now, before we proceed to the live example, I want you guys to take note of this thing. Now, I told you guys that the best time frame to trade this thing is the 1 hour time frame, right? And that is the 1 hour time frame before the session opens. Like we have New York session which is around 9 a.m., 8 a.m. or 9 a.m. So you want to see this thing opening before then. So now, if how do you know which time frame to look for your entry? So what do we mean by it? So how do you do it? So using the time frame alignment, you will know which one time frame to enter take your entry at. So if this CRT is happening on the monthly time frame, if this three candle pattern is occurring on the monthly time frame, you want to go to the daily time frame to find your lower time frame fair value gap and enter. If it's occurring on the weekly time frame, you want to use the 4 hour time frame. If this whole thing is occurring on the daily, you look the 1 hour, 4 hours, 15 minutes, 1 hour, 5 minutes, 15 minutes, 1 minute, 5 seconds, 5 minutes, 1 second. So that's the rule. And let me show you guys a couple of examples. All right, so now let's take a look at this example. Now, focus on these three candles, right? So let's say price has not yet printed this candle. Let's say price has not yet printed this candle. This candle is yet to be printed. Let's replace it white. So this green candle is yet to be printed. And notice something that happened. First of all, this is in a key time of day, 8 a.m., right? So the next candle is 9 a.m., which is what we want to trade it. So on 8 a.m., it happened a key time of day, which is 8 a.m. That is the first thing. The second thing you want to scroll down to is to see if it is on a key level. Listen. So what do we have here? Okay, first, sorry. So what do we have here? We have the time, 8 a.m., which means the next candle will be 9 a.m., which is key. We need that. Second, we see what this candle did. What did this one candle did? This one candle came and sweep this one candle's low and closed inside. So once this pattern occurred, the next thing you're going to shake it. We already know that this is happening on 8 a.m. So the next candle will be 9 a.m., which is good. So now the next thing we're going to do is to check if it's in the key level. And if you are to scroll back, you can see that this thing is actually happening in this key level. This whole thing is actually happening in this key level. So two criteria checked, time and price. So what are we going to do now? We're going to now mark this high as our take profit. So we are expecting price to trade to this place. Now, once this candle opens, and start trading, what we are looking for is fair value gap around this candle. So this is a 1 hour time frame. So we are going to go to the 5 minutes time frame. If this thing was occurring in a monthly time frame, then we jump into the 1 hour daily time frame for our entry. So now let's go to the 1 hour. Let's go and find our fair value gap on the 5 minutes time frame to enter. Now this is where this candle starts printing, and we can actually draw the opening price if you like. For clarification, you can actually draw the opening price. This is where this new candle started printing from here. So what are we looking for? We are looking for, let's get rid of this thing. So what we are looking for, we're looking for some kind of fair value gap to enter. So if you look well, you can see that just immediately this thing created a fair value gap which you can actually enter in. This is a fair value gap, a very tiny fair value gap. Sometimes I use order block, whatever. I'm looking for a key level. Basically, I'm looking for a key level, order block of fair value gap. So this one, in this case, it was an order block. So what we can use to do is to enter on this order block and target the high. Put our stop loss here and target the high. Our stop loss at the low and target the high. Now, if the risk reward is not appealing, what you can do is go down to a lower time frame and refine this thing. You're going to see a lower time frame order block that you can actually take. And so that's the first example. I want to give you guys a second example. All right, so now this is the next example we are going to be looking at, this three candle. Now let's imagine that this one candle, this one right here is yet to print. All this price action is yet to print. So the only thing, this is where price stopped at. So now the first thing we want to do is we want to only wait for the time. We want to be only trading at the time I talked about. I told you guys 9 a.m. You know all those kills on 3 a.m. 5 a.m. No, not 5 a.m. We have 1, 3, 9. Yes, 1, 3, 9. These are the key time that actually works well based on my back testing. So what I mean by that is that the candle that you're going to be trading will be that 1 a.m., 3 a.m. or 9 a.m. So that means the sweep will occur in 8 a.m. if you're trading the 9 a.m. So the first thing you want to wait for that time. The time you want to wait for 8 o'clock candle to finish printing. And when 8 o'clock candle finish printing, you want to look for this pattern on any pair you are trading, right? So bear in mind, timing is not essential. You mustn't use timing, but timing makes it high probability. So the next thing, because this thing actually works on the monthly time, it's a universal strategy, so it works on our time frame. So the first thing you want to see is we want to wait for the time that I talked about in case you want to incorporate timing to give you the best result. Then the next thing you want to do is to go and look for a sweep on this thing. You want to see a candle that sweeps one. You want to see that this candle sweeps this previous candle and close inside the range of this candle. So when you see something like this, what you want to do is you want to go and mark the high. You have already marked the low, so you mark the high of this candle. So you're expecting the next candle to take out the high of this candle. But before that, you want to look for one more criteria, and that is this whole thing occurring a key level? And if you are to zoom out, you can see that this is actually occurring on this other block. Right, so this is key. So this is key. Now we are going to wait for this candle to open. Let's mark the opening price. We're going to wait for this candle to open and now look for an entry in this candle. We're going to look for a fair value gap around this candle to enter into, or an order block, just any key level. Now this is the 1 hour time frame, so we are going to jump to the 5 minutes time frame. Now this is where that candle opened. So what is the closest key level we are going to be looking to trade in? And this is an entry that would have been missed because of if I was active on this trade, I'll be looking at this fair value gap. I'll be looking at this fair value gap. This is the fair value gap I'll actually be looking at. I'll be expecting price to open and trade inside this fair value gap. I'm expecting this retracement to come down to this fair value gap. So this is what I was expecting, but unfortunately I didn't get it. But I didn't get it. Price didn't give us a full retracement. So this is actually a missed trade on my end. But you guys understand what you're doing, what this strategy is about. So I do think this will be how my entry will be like. Maybe, and this fair value gap is big, so I'll be taking a trade at the mean threshold, stop loss at the at this place. Then my end take profit will be at the high. And depending, I like to take 1 to 5, so I might decide to squeeze this a little bit higher and take my 1 to 5. So I hope you guys understand how this strategy works. It's very easy, there's no complications in it, and this strategy have high win rates. I have high win rates. I've used this strategy a lot. So if you guys like this video, as always, please don't forget to like, smash the like button, and also subscribe to the channel. Also check out our free Telegram channel. We usually post free setups like this, and I'll see you guys around.